Hello everyone, hi and welcome to the channel Wall Street Mojo. To know more about this video, investment banking interview questions, watch the video till the end, and also if you are new to this channel then you can subscribe us by clicking the bell icon that's given below for your references. Welcome everyone, and today we have a very interesting topic, something nowadays the MBA students, they opt for investment banking, and they are really very excited to work in this particular industry. So let's understand, when you approach for an interview, how you are going to face or what sort of challenges that you're going to face during the course. So let's understand the interview questions in detail to get more understanding about how integrities play a role here. Let me begin with the top investment banking interview questions. See, the purpose of the investment banking interview questions and the answers simply to help you about, the investment banking interview topics. Now, as a fresher in the field, I'm sure you may have had jitters as to what and how to prepare for your first step in this finance world. Now, there could be an unlimited number of questions that can be asked on investment banking topics. And since it is very difficult to cover all of them, we would be discussing a few of them, of which are mostly important or very vital traits. Now, while reading through these write-ups, I would, whatever we are going to learn, whatever we're going to jot down in terms of write-ups, so whatever you're going to see, I would suggest you to actively keep answering the question yourself before checking the correct answer. Now, what will be this process? See, this will basically help you to develop a habit of brainstorming and answering the questions in a more structured way. So what you need to consider here is first the draft article, okay? And I'll keep on regularly updating with more and more questions and answer based on your feedbacks. So the interviews nowadays does not have typical questions that have been asked, which includes like the basics on financial concepts. No, the interviewers wants the candidate to think and avoid theories which everyone usually knows. And also, since these questions are technical ones, there would always be a correct answer. So in case you find yourself not knowing a particular answer, don't try and fake one. It is always better to confess that you don't know. That's the best thing to do. Well, let's begin on the accounting portion. That's the first question. Accounting in investment banking. What sort of question they can ask? They can say, tell me about the three most important financial statements and what is their significance. Well, this is one of the most commonly asked investment banking question. Three main financial statements, we all know balance sheet, P&L, and CFS cash flow statement. Now, speaking about the significance, the income statement, that is the P&L, it provides with the revenue and expenses of the company and shows the final net income in totality. Okay, that is that it has made over the period of time. When we talk about the balance sheet part, the balance sheet signifies the asset of the company in specifically like plant, properties, equipment, cash, inventory, and other resources. Similarly, it reports the liabilities, which includes the shareholders' equity, debt, accounts payable, and so on and so forth. So balance sheet is such that the assets would always be equal to the liability plus shareholders equity. So lastly, there is thing called cash flow statement. You can say that, which it is a statement which reports the net change in cash, and it gives the cash flow from the operating and investing financing activities of the company. Apart from this, what they can ask you is that the next sort of question in the same accounting of investment banking is, in case, let's say, you have the chance to evaluate the financial viability, okay, of the company, which statement would you choose and why? Very important question. So it would be basically viability. Financial viability is always cash flow statement. So the reason being is that it provides a true picture of how much cash the business is generating in terms of actual terms. Now, the cash flows are hence the main thing you actually pay attention to while you are analyzing the overall financial health of the business. Third, let's say that depreciation expenses, they may say, let's say the depreciation expenses goes up by $100. So how would this affect the financial statement? Well, the income statement in case of the income statement with the depreciation expense decreasing, operating income would decline by $100, and assuming 40% taxes, the net income would go down by closely around $60. When we talk about the cash flow statement, the net income of the top of the cash flow statement goes down by $60, but the $100 depreciation is a non-cash expense and that gets added back. So overall cash flow from operation goes up by 40. With no further changes, the overall net change in the cash goes up by $40. When we talk about the balance sheet, on the other asset side, because of the depreciation of plant, property, equipment goes up by $100, and cash that goes up by $40 from the changes on the cash flow statement. Fourth, imagine a situation where a customer pays a mobile phone with a credit card. So what this looks like under the cash versus accrual accounting? Well, in case of the cash-based accounting, how it will look like, if the revenue would not be accounted until the company charges the customer's credit card, okay, and it obtains an authorization and deposits the funds in its bank account. After these entries would be shown as revenue in the income statement and also the cash in the balance sheet. As against in case of, if you see for the accrual accounting, it would be shown as the what we call as revenue, and that will be shown as right away, but it would yet not appear in the cash in balance sheet. Rather, it would be shown as account receivable. Only after the amount is deposited in the company's bank account, it would be reported as cash, and also that is a portion that is taken into consideration. The second sort of questions that they can ask is the corporate finance, that is basically investment banking. Now, in case of the corporate finance investment banking questions, what exactly you faces? What the first question, it can be like, what is the formula for calculating WACC? See, do expect these kind of investment banking interview questions. See, WACC is basically the cost of equity. When you say WACC is your KE, cost of equity, into the proportion of equity plus cost of debt into the proportion of debt 1 minus tax, where the cost of equity calculated using the 𝐀𝐜𝐴M model. Here it has been calculated as per the 𝐀𝐜𝐴M model. Now the formula of the cost of equity is risk-free rate plus beta into equity risk premium. And the cost of debt is basically, the risk-free rate is basically the yield of a 10-year, okay, it's basically 10-year or 20 years US Treasury. Now the beta is calculated based on how risky are the comparable companies and equity is all about. A risk premium is the percentage by which the stocks are expected to outperform the riskless assets. So the proportion is basically the percentage of how much of the company's capital structure is taken up by each of these components. The another question that they can ask is there are, let's say, two companies, P and Q, okay, P and Q, which are exactly the same, but one P has let's say debt, whereas Q doesn't have any. So in this case, which of the two companies would have the higher WACC? So in this scenario, company Q would have a higher WACC, okay, and in this scenario, the Q would have a higher WACC because the debt is less expensive than equity. The seventh sort of question, it can be asked that the interview at the juncture might ask you that the reason why debt is considered to be less expensive. The answer to this follows that interest on debt is tax deductible. First thing, very important, multiplication of WACC formula. If you see 1 minus tax, now the debt holders would be paid first in the liquidation. Instinctively, interest rates on the debt are usually lower than the cost of equity, the numbers that you see, and as a result, the cost of debt portion of WACC will contribute less to the total figures than the cost of equity portion. Let me discuss the third part now. The third type of valuation related investment banking questions. Now, first, what they can ask you is describe the ways in which the company is valued. So this is another very common investment banking interview question. They can say you can say the first is by precedent transaction value analysis, and this is called as the transaction multiple valuation. Is when you look at how much other have paid for similar companies to determine how much the company is worth. And to use these method effectively, you need to be be very familiar with the industry of the company you are valuing, as well as the normal premiums paid for such company. The second thing is called the comparable companies analysis. Now, the comparable companies analysis is similar to the precedent transaction analysis, except you are using the whole company as assessment unit and not the purchase of the company. So to use these methods, you would also look at the similar companies to one or one you are valuing, and look at the price to earning ratio. So the EBITDA and the stock price and the other variables you think would be an pointer of the health of the company. Then there is discounting cash flow method. There is DCF method. Now this is one you see use the future cash flow, okay, or what the company will make in the upcoming years. So to determine the company is worth now. Now to calculate the DCF, okay, you need to work out that what problems of future cash flows is for the company and for the next 10 years, and then work out how much that would be in today's terms of what we call as the discounting. Then work out, you add the terminal value, okay, of the company, and then this will tell you how much the company is worth. The ninth type of question. Now, another question that they can ask is, which are the situation where we do not use the DCF in the valuation? So we would not use a DCF in the valuation if the company has an unstable or unpredictable cash flow, where debt and working capital, they serve a fundamentally different role. Like, for example, financial institutions like banks do not reinvest debts, and working capital forms a major part of their balance sheet. So here we do not use DCF for such components. The next 10th is investment banking interview question. List the most common multiples used in valuation. Well, there are relative valuation techniques that is given, like EV by revenue. Then you have EV by DA. You have EV by PE ratio, P divided by BV ratio, and so on and so forth. And that is for the techniques that you used. The 11th sort of question that they can ask, that, briefly explain what is leveraged buyout. See, a leveraged buyout is when a company or investor, they buy another company using mostly called as borrowed funds or the borrowed money, loans, or even bonds to be able to make purchase. Now, the assets of the company being acquired, okay, are usually used as a collateral for those loans. So sometimes the ratio of the debt and equity is in the LBO and can be closely around 90 to 10. And any debt percentage higher than that can lead to sort of bankruptcy. Well, let's understand the 12th question, that is investment banking interview questions. Explain what is PEG ratio. Now, these stands for the price earning to the growth ratio, okay, and it takes a PE ratio and then accounts for how fast the EPS for the company will still grow. So a stock which is growing rapidly will have a higher PEG ratio. So if a company is, let's say, PE ratio is having, let's say, 20, then the PEG ratio is also 20. So some might argue that the stock is too expensive. Well, if another company with the same EPS has a lower PE ratio, but also means that it is growing faster because the PEG ratio is 20. Well, investment banking question number 13. What is the formula of enterprise value? The formula for the enterprise value, you can say that, it is basically the market value of equity plus debt plus preferred stock and plus minority interest minus cash. Let's understand the 14th question. Why do you think the cash is subtracted, okay, in the formula for EV. So the reason why cash is subtracted is that it is regarded as the non-operating asset because equity value indirectly accounts for it. The 15th question. Why do we consider both enterprise value and the equity value? See, enterprise value, if you see, it signifies the value of the company that attributes to all the investor, whereas the equity value represents the portion available to the equity shareholders. So we consider both because the equity value is the number the public at large sees, while the enterprise value represents its true value. 16. What does it signify if the company has negative enterprise value? Now, when we talk about the negative enterprise value, as I said, the company could have negative enterprise value when a company has extremely large cash balances and extremely low market capitalization, or both. This could occur in the companies which are on the brink of bankruptcy, or financial institutions such as banks which have large cash balances. Well, we will continue with the 17th one. Now, they can ask that, briefly explain the process of the buy side of M&A deal. So a lot of time it is spent completely research on the potential acquisition targets, and with the company you're representing to go through multiple cycles of selections and filtering. So based on the feedback from the narrow down the list, and they decide which one to be further approached. So meetings are conducted to gauge the receptivity of the potential seller. Now, serious discussions with the seller, okay, takes place, which calls for in-depth due diligence and figuring out the so-called the offer price. Okay, negotiations negotiate the price, and apart from that, and other key terms of the purchase agreement, and announce the M&A deal or transaction. Now, briefly explain the accretion and dilution analysis. Well, in order to gauge the impact of the acquisition to the acquirer, or EPS so-called, and also compare it with, you can company's EPS if the acquisition would have not been executed. So accretion and dilution analysis is undertaken. You can say that in simple word, you can say that in the scenario of the new EPS, okay, being higher than the transaction, it will be called as accretive, while the opposite would be called as dilutive. The 19th question now, they can ask you, given a situation where a company, now 19th question, given a situation where a company with a lower PE ratio acquires a company with a higher PE, and in all stock deal, so with the deal likely to be accretive or dilutive, that's going to be a question. So the other thing being equal, in a situation where the company with a low PE acquires with a higher PE, the transaction would be absolutely dilutive in nature to the acquirer's earning EPS. The reason for that is that acquirer will have to shell out more for each rupee of the earning than the market value of its own earning. And therefore, in such a situation, the acquirer would have to issue proportionately more share in the transaction. 20. What are the synergies and its types? Well, synergies are where the buyer gets more of value than out of the acquisition than what the financial would predict. These are basically true, or one is called the revenue synergies. So this is basically the combined company can cross-sell the products to new customers or upsell new products to the existing customer. Now, because of the deal, it could be possible to expand its new geographies. Second is called the cost synergies. Now, the combined company could amalgamate between the administrative staff and can lay off redundant employees. So it could also be in the position to close down redundant stores or probably locations. Question number 21. How does the goodwill gets created in acquisition? Now, goodwill is the intangible assets that mostly stays the same over the years, and it is not amortized like other intangible. So it only changes when there is called as the acquisition. Now, goodwill is basically the valuable assets which are not shown in the financial assets of the balance sheet. So, for example, brand name, customer relationship, intellectual property rights, and so on and so forth. So, goodwill is basically the subtraction of the book value of the company from its equity. Okay, it is the subtraction of the equity from the purchase price. Now it signifies the value over the fair market value, and it signifies the value of the fair market value of the seller that the buyer has actually paid. Now, the next topic in the same investment banking interview can be fifth, that is initial public offer. So what can be the IB interview questions? Well, see, investment banking question for IB, question number 22. So they can ask, briefly describe what would you do if you're working on an IPO for a client. So first of all, we would meet the client and gather all the information necessary, such as like the financial details, such as customers, and learn about the sector they belong to. Now, after this, you would meet other bankers and lawyers, the registration statement, which would describe the company's business and market to its investor. Next, you would receive the comments, weeks in organization, the road shows, where you would present the company to the institutional clients and also convincing them to invest in them. After raising capital for the clients, the company would start trading on the exchanges. The next is question number 23 that they can ask, what are the benefits of the company of getting listed? Why they should get listed? So it is an important step for a company to achieve liquidity, and there are certain investors who would want to invest only in exchange listed issuers. So it helps the company to establish a recognized value for the stock, which in turn could help it use the stock for acquisition rather than cash. The next is miscellaneous questions. Now, in terms of miscellaneous, what they can ask is, what is the pitch book? Pitch book basically depends on the kind of the deal the company is pitching for, but the common structure would include like bank credentials to prove the expertise of the company and similar deals before. So summary of the company's options, appropriate financial models and valuation, investment banking charts, potential acquisition targets, or potential buyers. Now, it can also be the summary and key recommendations. Question number 25, they can ask you, tell a company that you admire or follow and pitch me a stock. Well, you need to structure your answer for such investment banking interview questions, keeping in mind something following. You can give the name of the stock that you have been following and the reason for the same. Quickly summarize what the company's business is. Provide a quick overview of the financials to indicate its size and how profitable it is. Also, if you can provide with the specific details of like revenue, the EBITDA multiples or its P multiples, and so on and so forth. So provide reasons as to how the stock or the business is more attractive than its revenue. You should speak about the trends and the stock has had at least in the past 3 to 5 years. You could also talk about the future outlook of the company also. 26. When buying a company, why do the PE firm use leverage? So the private equity firm basically reduces the amount of the equity to the deal by using the significant amount of leverage debt to help the finance or purchase price. So by doing this, it will increase the private equity firm's rate of return substantially and when existing the investments. 27. What is the convexity? Convexity is more accurate measure of the relationship between yield and price changes in the bonds in relation to the changes in the interest rates. So duration calculates this as a straight line when in actuality it is a convex curve. It is a convex curve and hence the name. So this is used as the what we call as the risk calculations because it can tell you how the bond yield will respond to the interest rate change. Then comes question number 28. Define the risk adjusted rate of returns. Now, when looking at the investments, you cannot simply look at the returns that is projected. So if the profit from the investment, let's say A is greater than the profit of the investment B, you may immediately want to go for investment A. But investment A might have a greater chance of the total loss than investment B. So even though the profit may be larger, it is a lot riskier, therefore not necessarily not necessarily a better investment. Now, the adjusted rate of return is when you are not looking at the return that an investment may give you, but you also measure the risk of the investment. Now, these adjusted rate of return is usually denoted by a number or a rating. Now, if you're technically minded, you may also want to mention that, the ways these risks are measured, like beta, alpha, you have so-called Sharpe ratio, R squared ratio, and standard deviation. So, after discussing so many questions, let me give you my final conclusion on this topic. The key to successfully answering these questions in technical investment banking question is to apply the concepts. Very important. You are learning and you need to test yourself. I hope this was helped you to learn some important questions and answer on the investment banking topics and bring you basically the step closer to crack higher profile interview. I wish you all the very best, and just make sure that we have only touched upon the technical questions and their types. Apart from this, you would also have to prepare for some personal questions like why investment banking interview questions, brain teasers, which are usually part of the testing the candidates. Well, that is it for this particular mammoth topic. If you have learned and enjoyed watching this video, please like, comment on this video and subscribe to all our channels, to our channel for all the latest updates. Thank you, everyone.